Hi, everyone. It's Rob Booker here. I'm with Scott Welsh. Hey, Scott.
Hey there, how are you?
Excellent. This is the Sunday night Bossilator webinar, and we've got a good one planned for you. The Bossilator course is only going to get better and better as the year goes on. There is some great stuff coming down the pike. Not only is there some great stuff, Scott, coming down the pike, but there are some great trades. There's some good stuff going on right now, actually. And I want to start things off by sharing my screen in just a moment here and looking at a trade that we either looked at last week or the week before. I'm pretty sure it was last week, and it was the New Zealand dollar, US dollar. And here's my screen showing it right now. And if you're here joining us, just let us know that you can hear us okay. We'd love to know that. It's important to us that you can hear us. Otherwise, it's a pointless exercise because Scott and I already know how to trade this by ourselves.
That's true.
And Scott, here is the New Zealand dollar, US dollar 1 hour chart. We've been away for 412 bars for those of you that are somewhat new to the course or haven't been to a webinar lately. The 800 period simple moving average is flowing gently down below. Looks like a happy face, smile. And that's the 800 period simple moving average. The number 412 in the upper right-hand section of my screen refers to the length of time that we have been spending away from the 800 period simple moving average. Now, my screen's a little bit wide here. I changed the monitors out, so it's a little bit smaller than usual, but the recording will show it in really nice, clear form. And in a moment, I will increase my screen size, and we'll take a look at it from a different perspective. But, Scott, we talked about it dropping to the 23% retracement and perhaps bouncing off of that level. And that is, in fact, exactly what it did. It bounced off of this level today, in fact. It hit it and bounced off of it, much like we predicted that it would and should do. And that was a buy trade, and that level was at exactly, I would say, 79.55 or so. And we're just 12 pips higher than that. This is the New Zealand dollar, US dollar, so it doesn't move. Doesn't move very
not a whole
far.
lot, no.
So don't get your hopes up about this currency pair moving a long way. And so the buy trade essentially happened. You can see here that to create this trade in the first place, it had to drop to the 800 period simple moving average where you see the arrow pointing at the currency pair. It had to drop to the 800 period simple moving average on the 30-minute chart. And Scott, it actually didn't yet hit it. So we have a reading on the Bossilator 30-minute chart, and you can see this in the upper right-hand section of my chart, of 1,103. I'm going to expand my screen so you can see this much bigger, Scott, and you probably can see that much better now.
Yes.
You can see the currency pair falling to hit the 800 period simple moving average. It has been away for 1,103 bars. Here's what it shows me. I don't think that anyone that hasn't taken this trade already should take it now. And the reason I'm going to say that is it hasn't hit the 800 on this 30-minute chart, but it really needs to. And we had a gargantuanly bad non-farm payroll report, a significant amount of bad news, and this is just not looking spectacular to me. I'm not overjoyed about this, and I wouldn't be if I were a Bossilator trader, because, and we showed this the last time around, we talked about the fact that the great Bossilator trades on this currency pair came and went when it hit the 50% retracement in this area right here on our screen, down at 78.50 or so. And that was the great Bossilator trade. That was the first primary trifecta Bossilator trend trade that we got on this pair. And it's gone. It's over. It was a great trade. And I think now, Scott, that we are in the midst of a possible correction on this pair. And any Bossilator trade that you take with the trend right now just needs to be done patiently with a little bit of reservations about being too aggressive about it.
And maybe not your full trade size, perhaps.
Yeah, maybe not your full trade size.
Get down even lower. I'd want it to come back even to get in this trade, but it is in the right area. I mean, it's thereabouts for a kind of a medium trend trade. Because like you said, the big trend trade is over, but we might be able to get something out of it still.
Now, I have a really messy Australian dollar, US dollar chart, and I'm going to show that to you right now. And for those of you watching the recording, I think you can actually see this quite nice. You just don't see the name of the currency pair. This is the Australian dollar, US dollar. And what we're looking at here is we created some divergence in this pinkish area on the chart, and you can see that on the recording now a little bit better. You can see those lines. You can see higher highs on price, lower highs on the Wallaby, for example, and a drop back down. It's the same story on the Australian dollar, US dollar. It's the same one. And Scott, we're only 403 bars since we were last at the 800. But I want to present an idea here by drawing this line on my chart. This line comes at 1.0175. I'll write that number on my screen. Okay. And there we are. That level is the do or die level for the Australian dollar. If the trend will continue if we can bounce off of this level and move upward. But if we break down below this level, as you can see this arrow on this side of the screen, we are going to fall to the 800 period simple moving average, especially in the midst of this horrific non-farm payroll report that we had on Friday. That was a terrible report. And you can see that this horizontal level of support and resistance, this level right here, matches up very nicely at 99.86 or parity even, 1,000. I mean, it's perfect. This is parity on the Australian dollar. And the 800 matches up with parity just brilliantly. Let me learn how to type. I even have a keypad and I still wasn't typing correctly. So I would watch for that. We're either going to get a bounce with the trend here, or this is over and this is going to fall through this horizontal level of support right here, and we are going to move down from there. Any thoughts about that, Scott?
No, I agree. I like that level of support right there, and I like that little mini trend trade up. But it's that 1,000 mark is probably going to be hit. I mean, it's 400 bars, which isn't a ton, but that's still a decent time to set up a counter trend trade anyway. So
yeah,
we're
getting close to the traditional or historical 500 bars that we used to look at. So it's not like we can't do this.
Yeah, I mean it's a pretty logical, and I'll show you something on the euro dollar even later about counter trend trades for small targets. But yeah, this could seriously be a counter trend pick just straight without even thinking about the trend. But I don't mind that trend trade at all. I think it looks pretty good.
Awesome. I'm going to remove all of the indicators from my chart here, and I thought we would, and we haven't done this for a while, I thought we would just take a moment and break down a currency pair from start to finish and talk about everything that we're seeing on a chart from start to finish. This is the British pound US dollar, and let's see if there's, excuse me, this is British pound Japanese yen. If you're joining us tonight and you want to look at one particular currency pair, I will take the first request that comes in. Hi, Elliot. Hi, Dan. Hi, Helen. Hi, everybody. It's nice to see all of you here. Hi, Kevin. It's great to see you here. I'll take the first suggestion, and if we don't get one, if nobody's really interested in one particular currency pair, I'll just pick one, and we'll just break it down start to finish, Scott, and see what the Bossilator is telling us about that one particular currency pair. I'll pull up the 800 period simple moving average, and all right, I'm just going to stick with this one since we didn't get a request. For those of you watching the recording, this is the British pound Japanese yen 5-minute chart. We'll start here, and we're going to go from time frame to time frame and break this whole thing down. I'm going to go back now up to the 4-hour chart and get a reading, and we'll look at every different kind of methodology you can trade with the Bossilator from start to finish. This is the 4-hour chart. And Scott, we're at the 800 essentially on this 4-hour chart, and there's a box around the currency pair on this 4-hour chart, and a break above that box or below that box, and we are at the bottom of the box right now, is either bearish or bullish for this pair.
Yeah, when that magic, it can go either way. You know, just it'll either slingshot like I've been showing, or break out of the box. But yeah, right now on the big time frame chart, that 4-hour, it looks like it might go short, but it could go either way.
Yeah, and there is a spectacular short trade sizing up here. We're just I don't know I can't remember what your slingshot numbers are, but we have just been back to the 800 recently, and that's a really good sign.
Yeah, 0 and 100 is when I
0 to
start
100.
looking.
That's what
So
I thought.
we're
Okay,
at prime time for the slingshot. Exactly.
brilliant. Well, we're right at the level right now, and a break and a move below 122.96 or 123 is just perfect. It's just a perfect place to sell this, right below 123. Move to break even at 122.10. That's the next level of support lower. I'm going to write this in the biggest number ever so everybody can see it. 122.10 is the next level of support. And then there's nothing.
Yeah, look at that.
After that, there's nothing in the way. And we're most likely going to get down to 119.28. And that is I don't know what your slingshot profit target usually is, but I would go for at least 200 on this.
Yeah, they're in the 200s. Depending on the currency, it's in the 200s. Especially for the pound yen, it might even be higher. So yeah, that's an excellent target, and we have natural previous low there anyway. So yeah, absolutely.
Okay, now I'm going to move down to the 1 hour chart and we'll take a look at it. On the 1 hour chart, we're at the 800 as well, so you can see that this consolidation is occurring across the board here, and we're at essentially 0 bars. I don't know what your offset is on your slingshot when you start counting. Do you start counting immediately?
I do. Most of the time I've done 10 bars, but lately I've been just doing 1 bar. You know, the offset is just
I have
one
too.
pip, not bar.
Okay, well,
Yeah.
we're on the same page then. I've been doing something really similar.
Yeah.
And you could draw a rectangle on this one too. It's the same size really, but you can't really draw much there. Let me show you a couple things. Draw a trend line across the tops of these candles here, and you could slingshot this, Scott, on a break above the trend line for an early entry on a buy slingshot. Or on this 1 hour chart, you could sell it on a break below this 123 mark. This is coming. It's like the apocalypse. The Mayans predicted it, and you cannot avoid it. The 15-minute chart is at 147 bars, and it's already broken away. This is already slingshot. It's already done it.
Yeah, it's past prime time. Yeah, it's past that 100 bar mark.
When
so.
you slingshot, Scott, it's a 1 minute chart, right?
No, well, I've done both. The stuff we've talked about in webinars has been all 15-minute charts. It moves a little slower. So that's predominantly I do 15, yeah, just like this chart. But I have tested 1 minute too. And you know, the 1 minute, the slingshot is not quite as effective because it's so much more twitchy on the 1 minute chart.
Yeah.
I mean, the 15-minute chart is definitely better than the 1 minute chart for a slingshot breakout, which is kind of weird, but I guess it makes sense.
Well, it's no problem. Well, this is at 147. This definitely was a slingshot trade away from the 800 down on the pound yen, and we're just waiting for what I would call leg 2, slingshot number 2, which is we've reached a level of horizontal support, and we're probably going to break down further from here. Things get really interesting on the 5-minute chart. We've been away for 770 bars, so we finally get a number which makes some sense to us, and I want to talk about it for a moment. You know, we get excited about certain readings on the Bossilator. We get 1,000 bars, or we get 500, or we start talking about things reversing. And I've said from day one, Scott, and it never really made as much sense as it does today. There are times when a fundamental catalyst occurs, and the numbers get thrown out the window, and we can really go excessive on this. And you can either be 416 bars away, and it just needs to get back to the 800 because of economic news, or you can be 770 bars away, and it just isn't going to do it. It's just not going to. It's not going to do it. And I thought I'd show this 5-minute pound yen chart to share some thoughts about that. Right now we're 770 bars away. If we rise up and hit this trend line and fall down from there, we're going to go a long way down. It's just going to drop. Even though it's 770 bars right now, this would generally tell us, for those of you that don't remember, if we've been away from the 800 period simple moving average for 770 bars, it's an early warning sign that we are probably going to return to the 800. And for those of you watching the recording, I just expanded the chart for the people watching the live webinar. It usually means that we're going to head back to the 800, and the 800 simple moving average is right here at approximately 124. If we break and close above this trend line, then of course we could rise up and retest 123.80, where we will probably find the 800 period simple moving average. We are at a decision point right now on this currency pair. This is go time. This is it. This is decision point. This is decision time on the pound yen, which for over 2 years now has been the dumbest, most boring currency pair ever, following its reign of terror. It was like friggin' Louis XIV all over everybody. I mean, this thing was wicked. And then it kind of went into a range and never broke out of it. And now it's finally coming to life again. And here's a perfect setup. We are at a decision point right now where you're either going to get a really nice buy trade up to the 800 or a really nice bounce off of that trend line and a move down below 123 for a gigantic 100 to 200 pip trade. So that's a breakdown from start to finish on pound yen. And you mentioned, Scott, that you might be able to take a look at the euro.
Yeah, the euro dollar? Yes, absolutely, I can.
I'm going to make you the presenter.
All right, how's that look?
Looks
You see me?
spectacular. Yeah, I'm going to move it in
Love
range
the
so we
white
can see
snowy
it
background.
on the recording.
What I've been working on, and I've said it many times, and both you and I have both said it, that counter trend trading is kind of what I like the best. It just makes the most sense to me. It's what my heart likes the most. So I've been doing a little bit of testing. I mean, I've been doing my live trading with the trend because the Bossilator is great with the trend. But I've been testing the euro dollar on a little bit higher time frame, so it's a little less twitchy, as I mentioned, for counter trend trades. And is it possible? Now, when I traded this in a discretionary manner, I waited for excuse me, a number that's a little bit higher, and I traded for varying targets, sometimes big targets, sometimes very, very small targets. But I wanted to just put it in a set of rules and test it as if the robot would trade it, and I found something out quite interesting. And I've looked at counter trend trading off and on, but never really in this time frame in the 15-minute chart. So I was pretty excited this week when I was researching this, because right now I'm trading with the trend, and as you've said many, many times, you know, my slingshot or even my trend trading, all of that, whether it's slingshot right off the 800 or it's a trend trade, I'm done by 300 bars away. That's over for me. I have to wait, and you get into a massive trend, I don't get a trade then for a while.
Yeah.
So I am kind of in my heart, I'm trying to add some counter trend trading, so when I get higher readings, I can still be trading. So this is something that I may be adding to my live accounts actually pretty soon. But here's the euro dollar 15-minute chart, and I'll go over the parameters first. We've gone over the entry quite a bit, but I can always go over that more if you want me to. But here are the parameters set up for the 15-minute chart. You can see it right now. It trades 24 hours a day, which on my trend trading, and when you trade in a smaller time frame, I can't trade it 24 hours a day. It's not as profitable, actually, trading 24 hours a day. But I've noticed in extensive testing, 15-minute and above, you can trade it 24 hours a day, and it still works out quite profitably. But here's the interesting number that you and I have talked about, is that when we're talking about robot and putting it in very strict rules, you can profitably start trading at 410 bars away.
That's
now,
awesome.
this could actually be,
Awesome.
400. Yeah, but I didn't know that. Now, you've said anywhere around that $400 or $500 bar away range is where this all started, at least when I started learning from you. So I thought it was interesting that 410 seems to be the number that works out profitably. And here's a couple more interesting things that I found out. Profit target here is 70 pips. Remember, the last number is a fraction, so 70.0 pips, which is not that much really on a 15-minute chart. I mean, it's decent, but the stop has to be bigger than the target, which is fascinating. And I tested everything from down to 10 pips all the way up to 200 pips. But the most profitable combination is just a small little target and kind of a big stop. Now, this makes sense to me, the 110 pip stop, because you have to give counter trend trades a lot of room.
Yeah.
I don't know how many times you and I have said that it's so twitchy and it's so frustrating. But if you give it a little bit of room, which seems strange because now, you know, all my trend trading is huge profits and tiny stops, you know, right? But now we're doing the other side of the spectrum, and you have to widen your stop or else you're going to get just just stopped out, stopped out, stopped out, stopped out. And it can still be profitable, but this is a little bit more. And what I did here, just to keep it simple, is parabolic SAR, I just kept it the same. It's been 0.07 the whole time. Stochastic's been the same. But I don't have a midline filter, which means once it bounces off the Bollinger Band, it can take it anywhere in the Bollinger Band. So those are the parameters. And this is what, and here's an example of a successful trade, bounce off the Bollinger Band. This is 410 bars away, so it turns blue, and took the trade, and it only took 70 pips. Now, easily you can see one interesting thing is you could take this much farther to the 800 or beyond. So that's something that possibly we could test, or even someone in a discretionary fashion could maybe just take this a little bit longer and move to break even.
Right.
But I did not move to break even, and moving to break even did not make me more money in this particular counter trend method. But anyway, here's your report from 2002 to 2012. It made $100,000 of profit and only drew down $20,000, which is pretty phenomenal.
That's fantastic.
Well, what's interesting, no, it's the best counter trend testing I've done for the robot. You know, again, I've traded counter trend and made money, but I've never tested anything this good. But look at the short trades. Now, you think, well, you know, of course, the euro dollar gets in a trend, and sometimes long works better, sometimes short works better. But look at the long trades since 2002. The long trades have made 91,000. The short trades have only made 9. So counter trend trading short on the euro dollar is not that great, which kind of I think that's very, very interesting.
Yeah.
You could even not trade counter trend, just not even take short trades, and just trade long, and that would even probably add. You know, you can see it's 75% win rate on the long, but that's no move to break even, by the way. I was just blown away by what you could do on a 15-minute chart, because like I said, I've never looked at the 15-minute for counter trend.
Yeah, and I wonder, that's fascinating, because from 2002 to 2012, a trader looking at the euro dollar over the course of that time would have seen bear markets and bull markets. You would have seen buy trades from essentially below $1.10 all the way up to $1.62 or whatever it was, and then all the way back down. So that it's not like, Scott, it's not like the euro only moved in one direction.
Well, that's what I mean. It's not like a stock that just went through a savage trend.
Yeah.
This is the euro that's been way up and way down and way up and way down.
Although the euro is probably spent more time trending up than down. The down ones were trends that didn't last as long. They were all corrections in the world economy. So that, you know, maybe that's a reason.
Well, it's interesting because, and I can show you, and we've shown you in the past, but when you do the trend trading, long and short are just about equal. But in counter trend, you almost don't even need to trade short. I thought that part was interesting. You can see your equity curve here, very steady. I mean, even though it's a counter trend trade, you can see we just keep on rolling.
That's a really steady equity curve. Can you talk
Yeah,
more? Can you once again mention some of the criteria that go into taking one of these trades?
Sure, absolutely.
For those of you that missed it.
What I'm looking for here is, first of all, to be away from the 800 for at least 410 bars. That's that number here. It turns blue. So that's the first thing I'm looking for in this counter trend method. And, you know, 400, 500. I found that 400 works really well on stocks, but on the lower time frames, there's no way you can start taking trades at 400. But as you get into 15-minute, you know, it turned out that it's actually, you can do it. So anyway, 410 bars. At that point, I'm looking for a combination of a couple things. First of all, I want a retracement. And you've been talking about retracements, you know, constantly since we started the course. So all I'm trying to do is retrace down and touch the Bollinger Band, literally touch it. After it touches, I want it to spring up, and two things in combination. I want the PSAR to change. So I want to see the PSAR is above, and then immediately the little pellet goes below, the little Pac-Man pellet. And at the very same time, I want the stochastic to be oversold, and I want it to pop up. You can see it was oversold here, and within 2 bars, boom, boom, it has to pop up. And that's what it did here. So bounce off. We've got a combination of PSAR and stochastic, and I need them both. They both have to be there, and then 70 pips.
That's awesome. Did you look at any other currency pairs or focus mainly on the euro?
I've just started on the Eurodollar because that's when I'm trading live, but I'm going to do all of them actually next week. In the next 7 days, I'm gonna look at all the fast moving ones like pound yen, pound dollar, and so forth. But
This
yeah, no, this is the first one. I started working on this middle to late last week. And it took me a couple days, and I was so startled by it that I'm going to start now and move it out to more and more currencies.
If you don't mind, I'd be interested, and I'm sure this question probably will arise for people who are watching the recording. Can you describe once again how you're using this parabolic SAR, these little pellets, as a substitute for trend lines?
Sure. Let me widen this
and
out.
how that came about?
Well, I love trend lines, first and foremost. That's since you taught them to me, that's my favorite. It's visual, it makes sense, and it works. But as I've explained before, you can't program it. You can't program on TradeStation. You can't program a trend line break. Now, I think you can on MT4. I think Chris has done that for you, and I've seen it. But you can't do it on TradeStation, or else the programmer that I'm working with can't do it. So I don't know which one is true. But that's how it came to be that I needed to find a substitute because I want something that does pretty much what a trend line would do. So if you look at this particular trade and we draw a trend line, and you know how I like the trend lines, super steep, that's what I would do on my personal charts when I was trading with in a discretionary manner, draw my trend line here and wait for a break. Well, I wanted something that entered just about the same time as a trend line did. So what I did is I drew a bunch of trend lines on my chart manually, and I loaded the PSAR on my chart. Actually, I loaded a bunch of things, but I eventually came across the PSAR after trying 2 or 3 because the PSAR had a natural line. You can see there's a line of these little pellets here, which to me visually looks like a trend line. So instead of breaking the trend line that I draw manually, I wanted to break this line of the PSAR. And you can see that this bar smashes through this line on the PSAR pellets. So you can see that this entry, the PSAR break, right, which enters at the open on this next bar, and the trend line are exactly the same time. And that's why I chose the PSAR. The only reason is because it is almost exactly like a trend line. And I did this for dozens and dozens and dozens of entries manually, just seeing when does a PSAR enter compared to my trend line. And when they turned out to be almost identical, that's what I went with.
That's absolutely fantastic. Do you mind if we look at a few more currency pairs and see what they look like? Is anything setting up for you in on your radar?
Well, we can look at that. Which first of all, to show that the euro dollar, if you're looking at the counter trend we just talked about, euro dollar 15 is only 190, so we're about 200 bars away from the robot taking another trade, or anyone taking another trade in this methodology on the euro dollar. So that's interesting. I also did Apple. I don't know how many people trade stocks, but I also did Apple. If you wanted to briefly look at that in that counter trend method.
That's great. And then I'll look at the Euro Aussie, if you can take a look at Apple.
Okay. This one I'll show you the parameters again. Very, very similar on this counter trend. As we scroll down. Now, stocks go a little bit earlier, as we mentioned. 300 bars on Apple, and it's time to start trading back. Apple is a pretty quick mover. Most stocks I've found are in that 300 to 400, or even sometimes even higher, closer to 500. But Apple wants to get back to fair value pretty fast. So wait for 300 bars away, and then start looking for a counter trend to trade. And all I did here, to make it easy, is I just did it on the basis of a trailing exit. So you enter, just like I talked about, Bollinger Band, PSAR break, and then I just put a $12 stop. The 1,200 means 1,200 pennies, and put a $12 trailing stop, and then just trailed it out. I didn't even set up for targets or anything. I just wanted something simple that would be easy to follow, and if it works simply, then it's probably going to work pretty well in any sort of method. So all I did was, as you can see here, it would enter. I can widen it out a little bit, but it bounced. It was 300 bars away. It bounced off the Bollinger Band, and we're in. And then just waits for a $12 retracement, which it got up high here and then came down, and that would be a typical trade. Here, it turns out we got moves back to the 800, but it didn't even go anywhere in our direction. It's just a $12 stop. And here is a $12 stop.
I thought Apple wasn't supposed to go down.
But you can look over since 2000 to 2012, $39,000 of profit with only $9,000 of drawdown. It's not that many trades. It doesn't trade that much because the stocks don't trade 24 hours a day. And I only traded long. Equities almost always only do long trades.
Yeah.
You can do short, but it's so much easier to trade long.
Right.
So even on Apple, if you wait for it to get below fair value, it works out pretty darn well.
That's awesome.
Yeah, I was actually surprised. I thought it'd be profitable. I didn't know it'd be this good, to be honest.
Well, I'll take a look at the Euro Aussie next. I think the pound yen's really the trade of the week. That's the setup that I like the best. But this is the Euro Aussie. Like take a look at this action. If you're watching the recording, I will reduce this in size in just a moment to let you see it a little bit easier. Been away from the 800, depending on the measurement that you're using on your Bossilator, you could be up to 1,500. And we have broken above a descending trend line, which could take us all the way back to the 800 period simple moving average. This is an interesting currency pair right now, and this has done a lot of people no good at all for a lot of years. But here's why it's interesting to me. The euro's been dropping on European news, but the euro and the Australian dollar corrected on Friday after the non-farm payroll report, but the euro fell a lot farther than the Australian dollar. Well, there's a good reason for that, and the good reason for that is because the euro has a tougher time right now, and the euro's dropping faster than the Australian dollar, or it was. So just in your mind right now, consider that both of these currency pairs went down on Friday. There's the Australian dollar dropping about 70, and here's the euro dropping about 400. So there's a pretty significant difference between the two of those. Why do I say all this? Well, because at some point in time, the euro will stop dropping as fast as it was, and the Australian dollar will continue to drop. That somebody always takes a turn first, and then there's a process of following the leader. Sometimes that process is more pronounced and much easier to see, and this is one of those times where you can see the euro dropping faster than the Australian dollar, but eventually the Australian dollar is going to make up some ground and is going to drop more quickly. When the Australian dollar against the US dollar begins to drop more quickly, you will see the Euro Aussie go up. That's because the euro against the dollar will fall. The Australian dollar against the dollar will fall. But the euro won't fall as fast, meaning the euro will be less weak against the dollar than the Australian dollar. Might seem complicated, but it's really a battle between two weak things. Whichever one is less weak than the other is stronger than the other. And when the euro begins to settle down a bit and the Australian dollar settles into a move lower, you could see this currency pair rise and go up to the 800 period simple moving average. I'm not ready to trade this yet, Scott, because it's been such a mess. But somebody out there is going to do it before I am, because they're going to pull the trigger on this one, and I hate this currency pair. We have done everything that you would ask it to do. We've traveled long enough away from the 800 period simple moving average. We've broken above a reasonably steep trend line. And we've done just about everything that you would expect. I don't know what it looks like on your 15-minute chart, but on mine it looks like a buy. What's the problem here? Problem is I hate this currency pair, and I'm not going to do it. But you could put a stop loss underneath this rising trend line, and you could even protect yourself on this trade pretty well, Scott.
Yeah, that actually looks pretty darn good, and I don't like it much either. I'm sympathetic. I don't. It's easy to not get in a trade on the euro dollar or euro Aussie. Excuse me. It's easy, but I mean, there's a lot of space, and it's been away for a good number. I know it's a battle of two weaklings, but it seems like this might be a good trade if I didn't hate it so much like you.
Yeah, and if it drops below this trend line, that's the stop loss. I would just reverse the trade. I would just go in the opposite direction. I would sell the crap out of it, move my stop loss to break even when I get enough profit to pay for the stop loss that I took, and then try for more. Yeah,
especially with all the stuff going on. I think you have to have a bias in both ways. I think
Yeah.
you have to have a thesis and a counter thesis on this particular currency pair.
Yeah. If you're watching the webinar now, you can see I'm short the Australian dollar, U.S. dollar. I sort of, I believe in what I'm talking about here. I've been short since Friday on this divergence, this move back to the 800, this early move back to the 800 on this divergence. It's an early trip back to the 800. It's a Bossilator trade because it's targeting the 800. And I'm already short, and I would love to add to it below 1.0175. But selling this currency pair against the dollar is essentially, for me, very similar to buying the euro against the Aussie. That this feeling that I have that the Australian dollar is ready for a decline. I'm just not quite ready to buy this currency pair. I would like to see it fall a little bit more before I did that. But like I said, this is a buy trade right now at the price that it's at, and you could move to break even at about 20 pips or something fairly tight, get up to this level of horizontal resistance at 1.2085, and see if we can get as high as 200 more pips up at the 800.
Yeah, it's a pretty good looking buy trade. If it just does what it's supposed to do, according to Bossilator rules, yeah, that would be pretty easy. I mean, it's due to get back up there, but it could be a while too. You just have to have both ready in your back of your mind.
Okay. Any other pairs or any other stocks, Scott, on your radar or anything else?
Those are the main ones I wanted to talk about tonight. I wanted to talk about counter trend on the euro and counter trend on the most popular currency and counter trend on the Apple, which is the most popular stock. But like I said, I'll have several ready. If people prefer counter trend trading, I'm going to look at several and see if the euro dollar is the star or if there will be several that you can start counter trading, and then I'll be able to let you know when would be a good time to do that.
Well, that sounds fantastic. Well, it's been about 40 minutes tonight, and we know all of you love to spend time with your families and have other things going on. And of course, Scott just got in from Chicago. Happy birthday to you, Scott, or whenever it was.
Yes.
And thanks for being here. We've recorded the webinar. It'll be up and processed by morning, so you can watch some of these trades again. But I think the trade of the week is the pound yen short below 123. Another alternative is a short Australian dollar below 1.0175 down to parity. And then you have a chance on the Euro Aussie that we don't like as much. And to round it all out and hedge it a little bit, you have a possible buy trade on the New Zealand dollar, US dollar, to give a sort of a balanced view, although that's a tough trade to take at a time like this. But if you did take it, now's the time. This is the price at which you would do it, and you would target at least 80.35. That's the zero line on this fib retracement from the highest point at the time that it was originally taken. You can also draw that fib line up a little bit higher at 80.80 or so. But thank you, Scott, for being here. It was a pleasure to spend some time with you.
It's great to be here. Great way to finish off my weekend.
And we'll be back next week. Thanks for being here, everyone. Bye, Kevin. Bye, Ned. Bye, Helen. And bye, everyone else. Have a wonderful weekend. Have a wonderful evening or a day wherever you are. We'll see you next week.
See you next time.